Why some people stay calm when the markets crash, while others panic and lose everything? Why do a few investors seem to make the right moves at the right time, while most end up chasing trends and regrets? Is wealth really about timing the market, or is it about understanding value? Today we dive deep into one of the most powerful books in financial history, The Intelligent Investor by Benjamin Graham, and how it shaped Warren Buffett's philosophy for more than 60 years. But this is not a book summary. This is the Armada channel interpretation, a journey where wisdom meets strategy, and where you'll learn how to think, act, and invest like the smart money. By the end of this video, you'll know how to stay calm in the storm of market chaos, the difference between price and value, why emotional discipline is your biggest weapon, and how to build an investment mindset that lasts for life. Let's begin. Have you ever noticed how the market sometimes behaves like a human being with mood swings? One day it's full of excitement, everyone's a genius, profits are easy, optimism is everywhere. The next week, panic spreads, headlines scream, crash, recession, it's all over. The truth is, the market isn't logical every day. It's emotional. It reacts to fear, greed, rumors, and hope, just like we do. But here's the difference between the crowd and the intelligent investor. The crowd reacts. The intelligent investor reflects. Think about the world we live in today. Social media updates every second. News alerts flood your phone. Everyone suddenly becomes an expert. Yet silence is the real power. Because the less you react, the more you can see clearly. Imagine standing in front of the ocean. The waves crash violently. That's the market's emotion. But deep below, the water is calm, and that's value. If you learn to look beneath the waves, you'll find the peace that most investors never experience. Buffett calls this emotional discipline. Graham called it rational investing. Armada Channel calls it financial intelligence. And that's where smart investing truly begins. Not in your portfolio, but in your mind. Buffett always reminds us, price is what you pay, value is what you get. The market shows you price every second, but value hides behind balance sheets, cash flow, leadership, and vision. When a company's price drops, most people panic. The smart investor sees a sale. Think about it. When tech stocks fell 30%, most people sold out of fear. But those who understood value, who looked at future earnings, innovation, and demand, saw an opportunity. Because value doesn't change with mood swings. It grows with time, discipline, and understanding. The market rewards those who think, not those who react. Here's the difference. A speculator watches the price. An investor watches the business. A speculator asks, will it go up tomorrow? An investor asks, will this company be stronger in 10 years? The speculator tries to predict. The investor tries to understand. And the truth is, prediction is noise. Understanding is power. When you buy a stock, you're not just buying a ticker symbol. You are buying a share of a real company. Real employees, real products, real cash flow. If you buy shares of Toyota, you're part of global mobility. If you buy shares of Samsung, you're part of digital innovation. If you buy shares of a solar company in Africa, you're investing in the planet's future. That's not speculation. That's ownership. Benjamin Graham divided investors into two groups, defensive and enterprising. The defensive investor seeks safety. Their main goal, preserve capital and sleep well at night. They balance their portfolio, 50% in stocks, 50% in stable assets like bonds, real estate, or gold. When the market rises and stocks grow to 70% of their portfolio, they sell a portion and rebalance back to 50-50. That's not fear, that's discipline. The enterprising investor, however, wants to grow faster. They research more, take calculated risks, and look for undervalued opportunities. Emerging markets, innovation, small but promising companies. Neither is wrong. The only mistake is not knowing which one you are. Because investing without knowing your nature is like driving blindfolded. You may move fast, but you won't go far. Let's look around the world. In 2020, tech stocks exploded. Everyone believed it would never end. Then 2022 came, and the correction was brutal. Yet patient investors who focused on value, companies with strong cash flow, real demand, and innovation, are the ones who thrived again in 2024. In Asia, fintech transformed entire economies. In Latin America, logistics startups grew faster than banks. In Africa, renewable energy turned sunlight into opportunity. The message? Markets change. Human behavior doesn't. Greed, fear, hope, doubt. They repeat forever. And the intelligent investor learns to dance between them, not drown in them. In the short run, the market is a voting machine. In the long run, it's a weighing machine. Benjamin Graham: no ship crosses the ocean with one sail. No investor should rely on one stock. Diversify, not to own everything, but to protect yourself from the unknown. A balanced portfolio might include mine energy companies, technology innovators, healthcare giants, agriculture, financials, even a small slice of emerging industries like AI or clean water. This mix cushions the blow when one area falls. And Graham's timeless rule: always keep a margin of safety. It means even if you're wrong, you're not destroyed. Invest with humility. Because confidence builds wealth, but overconfidence destroys it. Money follows mindset. If the mindset doesn't grow, the money won't either. Financial intelligence isn't just about numbers. It's about emotional control, awareness, and long-term vision. Study, learn, reflect. Know why you buy. Know when to hold. And most importantly, know yourself. Because the market is not your enemy, your impatience is. The investor's chief problem, and even his worst enemy, is likely to be himself. Benjamin Graham: so what have we learned? That volatility is normal. That fear is temporary. That value is permanent. That real wealth isn't about timing the market, but about time in the market. You don't need to predict the future. You need to prepare for it. Benjamin Graham's lessons survived decades because they were not about markets. They were about human nature. And human nature never changes. So when others panic, you stay calm. When others chase hype, you chase wisdom. That's what makes you an intelligent investor. This video gave you perspective. Don't just keep it and apply it. Because knowledge without action is like a map never unfolded. Start small. Be consistent. Invest not just in companies, but in yourself. And remember, financial freedom isn't about having more money. It's about having more choices. This is Sayed Korkmaz, and you're watching Armada channel. If you found value here, leave a comment with your biggest takeaway. Someone else might learn from your insight. Subscribe for more deep, powerful lessons about wealth, mindset, and freedom. Because here on Armada channel, we don't chase money. We build value.